Good evening and welcome, everybody. Hey, it's Keith here. Mortgage from Treehouse. We're back at it. Look at that lovely treehouse. Isn't it pretty? Just so cute. Anyway, well, welcome. We have an awesome show for you guys today. We come together every week here at 7 p.m. Pacific Standard Time. So for those of you on the East Coast, adjust your time frames accordingly. I guess that would be 10 o'clock. If you're over in Hawaii, we're coming to you at 4 o'clock. So, yeah, hey, we're live, Facebook, YouTube, here we go. So, all too often, I have a lot of folks, I'm just going to be honest, like totally ask the questions about home ownership, and then they go about it completely backwards. So I thought today would be a great day to jump in to the journey of home ownership. So let's jump right into it and talk about this fine journey that we call home ownership and what it looks like from the start to the finish. Because all too often it gets jumbled up and it causes extra stress. So if you want to have a more, dare I say it, enjoyable home buying experience, follow these steps. If you want it to look like chaos, continue to do the following, which is go to Redfin, find the house that you really love, go to the open house, figure out that the offer review date is tomorrow, and scramble to get into that bidding war. So here we go. I want to make sure that everybody doesn't do this. What I just described there with Redfin, going to the open house, falling in love with the house, then scrambling to make the offer is indeed getting the cart in front of the horse. So to save yourself from that headache, let's just start with the 4 steps in the home buying process, right? I'm going to make this bigger so we can all see it and make me a little smaller. So step number 1, the mortgage pre-approval. All too often, this is where the cart is getting in front of the horse. We have aspirations, love, want, need, desire to go out and buy a house and fulfill that American dream of home ownership. Just start with the pre-approval. Pre-approval is so important because it's really like those rom-coms where you fall in love with that guy or the girl, and then all of a sudden you find out that they're engaged and you can't have that. Yeah, that's what going out and looking at houses and trying to buy a house without a pre-approval is like. You fall in love with this house. It's the beautiful, most luxurious house that you wanted, and it checks all the boxes, and then all of a sudden either you can't afford it, you can't get the pre-approval fast enough, or it's off the market because things are just evaporating from the market quickly, super quick. So step number two, that's when you go shop. That's when you go negotiate with the seller. And then step number 3, mutual money and mortgage. We're going to jump into that because there's a lot of questions about what does mutual acceptance mean? What's all the money that I have to bring to the table? Do I need to do the down payment immediately? And then the mortgage process. So we'll talk about that. And then finally, the closing and getting your keys and moving in and celebrating at the finish line of home ownership. And you get to then move all your stuff, which is awesome. So you can order that pod, you could get that U-Haul and go drop your stuff at the new place. So first things first, let's talk about the mortgage pre-approval, step 1 of 4. So the mortgage pre-approval, this luxurious letter right here, this is what we're all aspiring to have in our hot little hands. This letter is like the key to the Golden Gate, right? You need to be able to show to the seller that you can actually buy the house for whatever number you put on your purchase contract. And that's where the mortgage pre-approval comes in. You're either sending one of 2 things, folks, and this is what happens in cash buys. If all of you out there are wondering, well, how does the cash offer work? The cash buy, instead of a pre-approval letter, they're sending over a bank statement, right? So you have to show the seller that you have the ability to execute on what your intent is, right? So with that being said, anybody remember, quick question, anybody remember what goes into the mortgage pre-approval? Mortgage pre-approval is, okay, I froze. That was going to be really cool. Oh, no, I don't want to share that one. Let's see if I can go to the next. There we go. Technology is great when it works. So here we go. Income, assets, and credit. That's all we're going to look at in the mortgage pre-approval. So we're going to do an online application and pull the credit. We're going to ask for or digitally verify your income. We're going to ask for proof of your assets for the down payment or digitally verify your assets. So once that's really it. That's it. The hurdles that you got to jump through are credit, assets, and income. Income, assets, and credit, and you're there. All done, right? So a lot of folks ask me, oh man, so if I'm going to buy a house today's April 22nd, right? If I'm going to buy a house in June, should I start the pre-approval process now? Well, maybe, but more than likely, no, you don't have to start right now unless you're going to offer right now. The pre-approval process, I do encourage people to look maybe a month down the road before they start actively shopping, just so we can pull credit and make sure that income and assets are all lined up. And it gives us that 30-day window if we do have to do any course correcting on credit, or we need to maybe save up another paycheck or two to make sure that we have enough funds to close, right? But past that, pre-approvals can happen typically within 1, maybe 2 business days. So that's a pretty awesome thing. Again, don't let that be the excuse to be able to go out there and look at an open house and say, oh, hey, Keith said I could get that pre-approval done within 24 hours, so I'm just going to go find this house and then rush to the finish line. I can do it. Mortgage technology has allowed us to do that. However, I just want to put that little asterisk in there. That's not a sane way to purchase a house. Trust me, the market is competitive enough that you don't need to add an extra layer of insanity. So if buying a house in the next month is your goal, right? You want to start making offers at the end of May, early June. Now would be a good time to get pre-approved to check those 3 boxes: income, assets, and credit. So once we've checked those boxes and you have in your hot little hand that pre-approval letter, you can absolutely start shopping and negotiating. So get out your phones, pull up your Redfin app and say, oh yeah, this house is awesome. Or that house, no, is not awesome. I'm not going to go see that house. But I know we all have them. If you don't have a real estate app on your phone right now and you're actively shopping for a house in the next 6 months, I would say go find one, because you're probably doing it wrong. You probably want to see all that data, because that's just what we do. We have nothing else to do at home with COVID times, so you might as well shop online. But you get to shop and negotiate. I'm not going to go too deep into shopping and negotiating short this one point, because that's really not where I come into play, right? We do the pre-approval. We hand you off to this. You need an agent, and you need a really, really good agent right now. And so they can help navigate you through all of these questions and all of the negotiating points in terms of your contract. So I'm not licensed to do real estate. I don't want to go out there and jump into real estate contracts. I want to help you guys find a really good agent. I have a handful of agents that I work with hand in hand to help get our clients into houses. I'd be more than happy to refer my clients. But if you're going to set out on your own path, what I would like to empower you tonight are some questions to ask a real estate agent as you're interviewing them to be your buyer's agent. So question number 1, you should ask a buyer's agent, how many buyers offers in the past month have they got accepted? Okay. How many buyers offers in the past month have they got accepted? Huge question. We want to know how well they can negotiate. We want to know what price points those are at. We want to know how they're advising, and then ask some follow-up questions to that. Just like I said, what are those price points? What terms and things did they have to do to get their offer accepted? Super, super important right now. Interview question number 2. What is the average number of offers your buyers write before getting mutual? Okay. And here's the litmus test, folks. In my opinion, a real estate agent that doesn't know that number, I don't want representing me, right? So I would want a buyer's agent that knows their numbers. Hey, you know what? It's a competitive market right now. My buyers are writing 4 offers. My buyers are writing 5 offers. My buyers are writing 6 offers. The reason why this is important is because you want to know, A, if you choose that agent, on average, how many offers are they going to have to write to get you into a house, right? If there's some sort of outlier that they're saying, oh yeah, my buyers are only writing one offer, that's a unicorn. That's not happening very often. So there's some follow-up questions. Well, how is that happening? Are you doing off-market deals? Are you doing this? Are you doing that? How is that happening? I can tell you right now, my buyers that I have pre-approved are on average making 6 offers before they get one accepted. It is that competitive out there right now. Just let me give you a follow-up example. This weekend, I had 3 separate offers that were submitted, and those 3 offers all escalated 6 figures, over $100,000 on each one of these deals. And quite frankly, 2 of them I thought were going to get it, but they didn't. They actually lost out. Now, of those 3 offers, the fewest offers on one property was 22, right? So I say this because it reiterates how competitive the market is, and you want to understand a buyer's agent's ability to represent you and to help you get guided through the system to get that house that you wanted. Now, that brings me to my next question. One thing that's holding people back is, how available are you as a buyer's agent right now? Properties are coming on very quickly. The showing times are filling up very quickly. So you want to make sure that you have a buyer's agent that is able to get you in to see the house, right? So ask if they have a team. What does that team look like? Is it one listing agent and 2 or 3 buyer's agents? Is it just one solo agent? Solo agent isn't bad. You just need to have some follow-up conversations there with, well, how many clients are you currently working with right now, right? So if you have a solo buyer's agent that is working with 5 people right now and properties are coming on, they could be spread thin. So ask them how they're going to solve that problem if they have more than one buyer that wants to go out and look at a house right now. So it's super important to ask how available they are to get you into that listing. Okay. Of my top pre-approval number, so if my top pre-approval number is, this is a great scenario question. My top pre-approval number is $850,000. What houses would you show me? The reason this question is so important, it says if a buyer's agent comes back and says, hey, I'd show you a house at 850, right? They're not taking into account the escalation side of things here in the Tri-County area. Like if you tried to bring an 850 offer, and quite frankly, the 3 offers I told you, the lowest one was an 889 list price. So those houses are going super fast, super competitive out there. So setting expectations for your guys' success is what we as professionals need to do. And if a buyer's agent's not saying, well, it's competitive, so we back that down 10, 15% and go look at a 750 to 775 house, that's the advice that wins in today's market. If you're pre-approved for 850, we should be shopping down at 700 to 725, 750 at the top. So we have that elevation, that $100,000 to escalate up. So those are some quick questions. Last but not least, how, as a buyer's agent right now, are you going to protect my interest, right? Again, not getting too much into the negotiation side. There are terms in the contract that can make your deal more appealing. You have to be really honest with your buyer's agent on what your risk tolerance is and what you're willing to waive or not waive and make contingent on your offer. So I'll leave that all to the real estate agents, but you should definitely ask them these questions. And finally, how are you, the buyer's agent, paid? That's a great question. We should all be transparent, in my opinion, and the buyer's agent should be more than happy to answer that question for you. So moving right along, now that you found your agent, that agent goes out with you, you guys are shopping for houses, and you've made your 1, 2, 3 offers, you're in the house and you're off and running. Well done. What happens next? This is kind of where the whole, I call it musical chairs, right? This is where the music stops and everybody's like, yay, we got mutual acceptance. Now what? And so mutual means money and it means mortgage time, right? So talking about the money side of things, when you get into contract, there is what's called earnest money. And hopefully, earnest money has been well explained to you by your real estate agent. And if you guys are just learning about earnest money right now and you're starting the process, earnest money is your good faith, show of good faith. Let me go to the next slide. It's your show of good faith to the seller that you're going to make good on this contract. And so long as the contract stays together, you get your financing and you move into the house, your earnest money is not at risk. But say there's something in the whole process, say you get relocated. Let's say this. You get relocated to California and you decide not to buy the house and you back out, right? Was that stipulation in your purchase and sale contract? Yes or no? If it's not in your purchase and sale contract, which it's not, by the way, you then have your earnest money on the table. The earnest money could be then given to the seller and you're out the earnest money. So going back here really quick, earnest money right here, this is on page 1 of the purchase and sale agreement. All my real estate friends out there will recognize this very clearly. Earnest money, it can be somewhere between $500. I've seen earnest money $500 up to 5%, 10%, whatever the down payment is that the buyer is willing to put on the table in the form of earnest money. So what you can see here is in this particular situation, the earnest money is $40,000 and they have 2 days after mutual acceptance to be held by the closing agent, which is the escrow company. So you're going to have to cut a check. You're going to have to get that money, whether it's wired over to the closing agent, whether it's a cashier's check or you walk in with a personal check, it needs to get over to the title and escrow company. So cool thing about the earnest money, it's not lost, right? So we get through the contract, the mortgage is almost done, we get to the closing table, and guess what? That earnest money, whatever that number is, gets rolled into and applied toward your down payment and any applicable closing costs. So now you've kind of prepaid part of the down payment and the closing costs in the form of earnest money. So if your earnest money was $40,000, like in that example, and our total funds to close was $100,000, at the closing table, you're only bringing $60,000 left, right? So that's awesome. It's not money that's lost unless you violate the contract and get out without a contingency. So, but wait, there's more money due at the very beginning of the transaction, right? Mutual, you got to get the earnest money in, and then you have to pay for any third-party reports and inspections, right? If you're able to get an inspection on a transaction right now, good on you. That's awesome. A lot of inspections are happening either pre-offer or they've been done by the seller, and that's your opportunity to look at. The inspection is the one that's provided by the seller. The other inspection that you have to do is an appraisal. So appraisals typically cost somewhere between $800 and $2,250. Now, the $2,250, I want to describe what this situation is. This is a very expensive appraisal. They're typically somewhere between $800 and $1,000. $2,250 is a very unique property. It's waterfront. It's not in a heavily populated area. It's a very famous lake on the east side of the mountains. But appraisers right now are getting busy. The purchase season is in full force, so we have seen a little bit of increase in that fee. The $2,250 is definitely on the extreme high end, but like I said, we're seeing appraisal somewhere between $800 and $1,000. So once you get mutual, there's some money coming out of your pocket in the form of two things: the earnest money and then the third-party reports with inspections and appraisals. Once that's done, there's no money out of your pocket until we get to the closing table, the actual closing table. So this transitions us into the mortgage side of the coin. So while you're cutting the check for the earnest money, while you're getting inspections done if you have them, and you're ordering the appraisal, we're also asking you to update all of your income and asset documentation. So let's think about this for a second. When we do the mortgage pre-approval, that mortgage pre-approval is good for 90 days, right? then we have to be under contract, or we're going to have to re-pull credit because the credit will then go stale at 120. So if we got pre-approved 3 months ago, we need updated pay stubs. We need updated bank accounts because the ones that we have in the file were from 3 months ago. Our team, we like to update them every month. We would ask you during the pre-approval process, we would ask you to update your income and asset documentation. But we will ask you, once you're in the mutual, to update any of those applicable documents that need to be refreshed before the closing date. The other thing that we do that actually is kind of behind the scenes, that kind of Wizard of Oz, behind the curtain kind of thing, is we order the other third-party reports with title, appraisal, condo docs, any other environmental or engineering certs that we need. So engineering certs come into play with manufactured mobile homes, but we order a bunch of different things for you guys to go into your mortgage to put it all together. And then once we have you guys over here updating your income and asset documents and all the third-party reports have been ordered, the next order of business in the mortgage process is to wait. Wait. Because we have to wait for all these third-party reports to come back. The title report has to come back. The appraisal report has to come back, which right now appraisals are about somewhere between 10 and 15 business days. So that could be up to 3 weeks. So we're waiting for all of the ingredients to our mortgage recipe to culminate right there and to come together. And then at that point, which is probably 2.5 weeks down the road, we submit the mortgage for final underwriting. Final underwriting will consist of the underwriter going back in and double checking that your income is perfect, your assets are good, and then checking all the boxes in the appraisal. The appraisal is somewhere between 15 and 20 pages. Checking all the pages of the title report to make sure there's no encumbrances, there's no liens that have to be removed. And then we issue a closing disclosure. And what happens with the closing disclosure is that is your guys' final look at the structure of the loan. You know, is it on a 30-year fixed? Is it at the rate that we locked? Is it at, are the closing costs in alignment? And the closing disclosure goes out to you guys typically at least 3 days before closing. In my team, we like to get that out as soon as possible. And as soon as possible means once we get the appraisal back, we send that out to you. And now, oh, yes, Johanna, thank you so much. And not make any big purchases while you're waiting. Let's go back to the wait slide because this is a super, super important thing. There is nothing that will kill a mortgage deal faster than doing exactly what Johanna just said, going out and making a big purchase. I've had folks go out and decide that they wanted a new appliance package for their new house and went out down to the local hardware store and opened up a new line of credit to the tune of $10,000 for all the new standard appliances and killed the debt to income ratio. I've had people go out and buy cars or co-sign for cars. Or just remember, if you co-sign for anything, it's going to be on your credit report. So definitely, while you're waiting, don't make any big purchases. Wait until after we close. Those appliances will be there. I guarantee you, those appliances will be there after we close. So no credit inquiries, no new credit. So closing disclosure. Going back to the closing disclosure, that is the light at the end of the tunnel, folks. Once you get that closing disclosure, you know you're in the home stretch because we've got the final numbers out to you and we're ready to get the actual formal legalized mortgage deed of trust and the note over to the escrow company so you can sign. So to sum the mortgage process up, it's taking right now about 30 days. From mutual acceptance to docs, it's taking about 30 days. So definitely understand the timeline there. There's lots that is going to be happening behind the scenes on a daily basis that you guys, you don't actually, as the consumer, as the borrower, you don't see us working with underwriting, working with the escrow and title folks to get everything lined up. I guarantee you there's at least a dozen people that are diligently working throughout this 30-day period to make sure that the mortgage is properly put together and there's no hiccups at the closing table because no one likes surprises. We may say it. We may say, oh, I love surprises. Guess where no one loves a surprise? No one loves a surprise at the mortgage closing table. when you're going to buy your first house or your second house or your first rental property, right? So that is the dedication that we have with all of our fine folks behind the scenes between title and escrow and our underwriting teams and our funding teams. So it takes 30 days. Finally, we arrive at step number 4. Step number 4 is we've hit that finish line of home ownership, and yeah, we got the victory. We got the victory arms up, woo-hoo, raising the roof. So what does that look like? After the closing disclosure goes out, we're going to email over to the escrow team. We're going to send over your closing documents. It's going to be the mortgage deed of trust, the mortgage note, and all of the additional regulations and disclosures that you have to sign. I almost said something, but I won't. But it's a lot of documentation. The cool thing is the majority of our loans now are hybrid signings, right? The majority of the excess documentation to talk about truth in lending and RESPA and all of that can be electronically signed. So when you go to escrow, you're signing a really small, skinny package as opposed to a package that looks like a ream of paper, which is super awesome. But the signing is the second to last step. There's one more thing after signing. In Washington in particular, we're not a wet fund state. And it's totally geek out on this. Wet funds means when we send the docs, we send the money to the escrow company, and all they need is your signature, and we can fund the loan, record, and give you keys. Washington is not that way. Washington, we are a dry state, so we have you sign, and typically when you sign, there's not enough time between your signing to get it reviewed by our funding department and funded on the same day. So what happens in the majority of loans in Washington state is you sign one day and you fund the next. So at that time, you go in and sign and you're like, yeah, I'm going to get my keys. It's typically the next day. So curb that enthusiasm for one more day. I jumped a slide. So typically happens one or more days before you get the keys. So coming back, this is when you go in to sign, this is when the escrow company, when they schedule your appointment, is when the final money is due, right? So at the beginning, we're going to do earnest money. We're going to do inspection fees. We're going to do appraisal fees. Past that, there's no money that comes out of your pocket until the actual closing date. So when they say, hey, Mr. and Mrs. Borrower, you're ready to come in and sign your closing docs, come on down and here's the final number for the closing. They'll give it to you to the penny. We balance these bad boys to the penny. So that's really when the final numbers are due. Not at the beginning, not in the middle, at the end. Moving right along, let's just go through it, recap it here really quick. Man, we burned through a half an hour fast. So step number 1, do not get the cart in front of the horse. Get your mortgage pre-approval done. Don't break your heart. I've seen it all too often. It breaks my heart a little bit. But don't break your heart. Make sure you get the mortgage pre-approval done first, and then go out there and shop. Really quick, mortgage pre-approval, give it 1 to 2 business days to get that buttoned up. If you're a complicated borrower, like self-employed, or you have some really weird way that you're generating income, give yourself a week. If you're a W-2 employee, salaried employee, you can jump in and have a pre-approval typically within a day or 2. But be very careful in going out there and shopping for those homes and falling in love too fast. I know it happens on like reality TV shows and stuff, but in the real estate world, it's a heartbreaker. Don't do it. Step number 2, shopping and negotiating. Pack your patience. Go back through this presentation. Ask those questions of your buyer's agents. If you want a direct referral from us, we'd be more than happy to give you a referral. Our professional team of real estate agents, they're second to none. So it's super important to me that we pair you up with the right real estate professional, especially in this market. If your agents aren't writing clean deals, if they're not able to communicate effectively with a listing agent and meet the needs of the seller, it's going to be really difficult out there for you. And I just say, if you're not getting it from your current listing agent, go find it from not listing agent, buyer's agent. find it from a buyer's agent that's going to represent you and put you first. Super important right now. Third step, mutual money and mortgage, right? You're going to get mutual acceptance. You're going to get that offer accepted by that seller, yeehaw, earnest money, pay for your reports, appraisal and inspection, and then no money is due out of your pocket until the actual closing date, after the mortgage has been processed and you're at the escrow signing. And then finally, closing and keys, and you're moving in. Awesome. It's that easy. I just love it when a plan comes together. So that is it in a nutshell. If you guys have any questions, let me know. Throw it in the comments, share, like this. If you found value in it, please definitely share and like this, because these questions, they come up a lot, and unfortunately they come up at the post-mortem where we can't do things about terms of a contract or mortgage structure, right? We're too far down the process. So education up front makes for a super, super, and I will say it again, pleasurable home buying experience. You just have to prepare yourself and educate yourself appropriately, and it will be no big thing. So, actually, finally, next week, I've got a really fun show lined up next week. These are my top 10 questions that I get from agents, that I get from buyers, that I get from potential home sellers. We're going to go through my top 10 questions that I get on the daily. So I figured, hey, if people are asking these so frequently, I'm going to bring them to the show. We'll talk about them. We'll give you the answers, and you guys will be that much more empowered to make those mortgage decisions and understand the mortgage process, whether you're refinancing or you're buying or you're selling and then buying. We're going to address all my top 10 questions that I get as a mortgage professional. So we'll catch you guys next week. And if you have any questions, let me know. Have a great evening and enjoy the sun behind the clouds. Catch you later.